So, what's your New Year's resolution, especially in your trading? This is something I just thought of where, I went over various trades that I've been doing in the last couple of months, and I kind of do that in a manual way. I mean, I know that you could have journalytics and all that, where you could review your trades and all that. And I've kind of come up with some themes and ideas where, I'm kind of still debating if, I should kind of take certain type of trades sometimes. And I've noticed that if I go back to basics and understand the market context, right? So when we're kind of trading or scalping, let's say, there's two methods or two approaches in my opinion, where you're kind of more structured, you're looking for certain levels and areas to kind of go and participate. You want to see certain things occur on the tape or on the footprint. Uh, I think the way I want to kind of explain this is that I'm still kind of looking to see what I should use as my main triggers sometimes for my trading. Because I've come to the idea that going back to basics where you're seeing absorption, where you're seeing refreshers, refreshing orders on the dome, on the depth, and you're kind of looking for the value of the market right now. Uh, Sometimes you tend to kind of lose track of the context. So what I'm trying to do here is kind of give you guys certain themes that I've come up with where I want to really maintain this for the new year. um, I didn't want to just say, oh, I've been doing this and doing that. This is working, this is not working. It's mainly what should I look for as a main trigger when I'm trading, right? Um, First of all, I think we need to really trade what we're seeing right now. It's tough to not be biased to whatever happened in the overnight or what happened at a certain level. I'm trying to really keep the bias part of trading kind of separate and really try not to be biased and go with the flow of the market, what's occurring right now. So, the way I want to explain this is I'm using now various ways to get a trigger, and my triggers are very different. So how could I explain this? First of all, I think the best thing to look for when I'm looking for a trigger is really to understand what the current tape is doing. If the current market is rotating, and what is the correlation between the two markets? And mainly I'm talking about ES and NASDAQ. Although I do sometimes trade the Russell, the gold, and crude, I want to really just focus on what's occurring right now. So I've looked at various trades, and I think this is going to be kind of the New Year's resolution when it comes to my trading for 2022, where I'm going to perhaps just wait for some movement before actually taking a trade. So if I explain, I'll give you guys one little example here that occurred very recently. I believe it was, if I'm not mistaken, uh, the date was the 27th or the 28th of December. I mean, it is holiday season now, and it's like lower liquidity, but the volatility was not that bad. It was pretty good to scalp certain areas, certain good trades that I did, and this one was particularly very, very clear. Before I just go on, I'll just emphasize that in the next video, I'm going to go over my chart books because I'm getting a lot of questions where a lot of traders are asking, like, could you perhaps go over your chart book? So I'm just going to give you guys like a peek sneak right away just to give you guys an example. This is a 30-minute footprint with uh, range bars here where you see the candles on ES. I used, and again, this is Sierra charts. I just use a 6 tick range. I just want to see how the market's kind of moving. Is it kind of spending some time within a certain number of ticks? And I've got various um, charts for either ES or NQ. So if I show you the NQ one here very quickly, it's mainly this chart here where I have, again, same kind of idea. You're looking for rotations to see how many, you know, how many range, well, how many ticks of range is every candle here. So again, it's just a quick view way to see what the market's doing. Again, I'm going to go over that in another video that's coming up, which will just go over my chart book, and I'm getting a lot of questions around that. So if you come back to what I was mentioning earlier around a trigger, right? So I'm looking for a trigger to occur where this here, I actually tweeted this. This was my tweet where I had shown basically what had occurred at that area on this day. So 3,396 traded at 47.70, and it was all on the bid. So there was a massive absorption here, okay, and it basically shot up. So let's just make this very clear. Again, you guys could always go ahead and follow me on Twitter because I think I've mentioned this where I kind of generally go over various zones that I'm looking for on other indices and also on ES and gold and crude. But if we come back to the example that we had just here, it was this occurrence right here where we had huge absorption right at the initial balance low. Okay, it was actually the 30-minute first candle. Sorry, it was the first hour low basically. And again, this is really rare that you'll get a huge volume like that right away, and it's because we've got low liquidity. It's holidays trading. It's not the same typical trading days that you would have in a regular trading session. But when I saw this, okay, so this is to come back to trigger, right? When you see this, right? This is kind of, I'm not saying it's an edge, but it's why us footprint traders and order flow traders, when you see this, you want to kind of put the brakes on shorting, right? Because the market was coming down, you see this occur, there's one big trader or an institution, I don't care who it is, but someone just came up with a huge absorption here, right? So when you see that, you kind of like, okay, I'm gonna, if you were short, you would most likely, again, I would close good chunk of my trades if I was short that day, okay, from this area. By the way, I've got the VWAP here, which has the first standard deviations and three standard deviations. I just have it like that because I share my chart books sometimes with some traders, and I think this is one chart that I had recently shared with a trader, so I sent it to him, and he wanted to have the VWAPs like this, so I gave it to him this way. And that was one trigger. You see that absorption. When you notice that kind of stuff, you want to kind of like, okay, that just occurred. Again, I'm not saying as soon as you see that, go long and it's going to be an easy ride up. Normally speaking, you won't get that kind of absorption right away. And when you do, we tend to kind of come back and retest it. You might not retest it right away, but it might be later on in the day, which kind of did occur here where we came back into that area, but we never really got into that price. So it's just one thing to notice that, when you see a trigger like that, so that's trigger number one, absorption. You want to see an anomaly there. I even tweeted it when I mentioned on the tweet here. I was saying that basically it's an anomaly. It's not something that you'll see all the time, just occur all of a sudden at the low of the initial balance low. You'll get it once in a while, but it's not going to occur all the time, right? So that's one trigger that I'm going to mainly focus on to see when I see an absorption, an anomaly like that. I'm going to, try to trade that more often and try to base my current bias right off of that. Okay, so absorption at the lows, absorption at certain levels, and it's got to be an anomaly. It can't be just 200, 300 as volume. You really need to have really decent volume, and this here would be really an anomaly and decent volume. Also, when I look at my triggers, I want to tell myself when I see an anomaly on the delta. And here is an anomaly here where delta is really strong, okay? And you want to know what the market will do in this area. So it's like telling myself, really, something happened right here. And it's easier having it on a chart like this, so I use what I have, basically a 47-inch Samsung Curve. I have two other screens, 27-inch screens. I have basically like four screens here, right? So I'm able to have my domes on one screen and then this chart book like this. And it's a lot easier just having the 30-minute footprint for ES and maybe the 15-minute footprint for NASDAQ. And what I'm noticing is here, I'm looking for a trigger again. I don't want to just say here, oh, the buyers stepped in and we're going to have a market that's going to move higher. I'd say go ahead, look for longs because now we've got serious delta here. Either shorts just covered, and it was a short squeeze, but in this case, as you can see here, we don't have a lot of areas where the delta is hitting extremes. And as you can see, my extreme levels are very clear here on my chart book. Okay, so this is one other trigger. So mainly when I see these triggers occur, that's where I want to participate. So coming back to, I want to see some movement. I want to see some kind of trigger when it comes to order flow to tell me that now is a good time to look for, directional bias or a change of the current market structure. Okay, so that was one thing. And I, coming back to ratio charts, I think a lot of people are kind of like, like confused when it comes to ratio charts. This is a ratio chart that I use on TradingView, so it stays on one of my screens. It basically tells me, and you have the way it's written here, so just look at it and see how it works. And then I have a basic Keltner that kind of shows me the volatility of this. I mean, it's very basic. It's just telling me one NASDAQ to three ESs. So when I'm looking at which market is a bit stronger versus the other one, or if I want to mainly trade one market, which one is the one that I should emphasize on trading. So these ratios during the day do change. So if you go back to 9:30, which is the open right here, one Nasdaq to three ES, the ratio was going down, which means that most likely you did not want to be really long Nasdaq because high odds ES was stronger in volatility terms. Okay, so when I'm playing spreads, I kind of tend to look into this, and if I see really a directional area like this, I'm going to try to play the market that's a bit more volatile and really use that volatility. Okay, as I was saying, um, coming back to like defining which market is ready to move and really defining what's the volatility here. As you all know, for me, what really counts is execution. Um, I mean, coming back to quickly the triggers, the context, to make sure that I'm not overly biased and I'm reading what's occurring right now. Um, I really put a lot of emphasis on execution because if I'm not able to filter the volatility, validating what type of ranges we've got, how far I have to put my orders, and maintaining a good understanding of the rotations, I tend to generally make execution errors, and I'll be too quick into the market, and you know I'll not have a good entry. So coming to the three main themes where the way I trade, I think intraday traders we really need to emphasize volatility. Too much is kind of harmful. It's tough to manage, but good volatility and really maintaining a good way to filter that will we need that as traders. I mean, we really need to have volatility, or else it's tough to really make decent, entries and exits so that profits. I don't want to work too much to make money as a trader. I'd like to really participate when all of these main themes, velocity, how fast is the market coming to my entries, is it too quick, is it too slow, uh, and then the pace of market, what kind of volume is being traded within every 15 second or every minute. All of these, I kind of have a way to filter all of it. And there's good days where, normally speaking, throughout the day, unless we're talking about noontime or whatever, throughout the day, the first 30 minutes or from 1 p.m. to 2 p.m. kind of, or 2 p.m. to 3 p.m. I'm talking about Eastern time here, where you'll always have a good period where it's easy to trade, okay? And all these parameters kind of align for my style of trading. And coming back to quickly what I've been looking for and my New Year's resolution is I've maintained a good, the aspect around psychology, right? Uh, I do take deep breaths, I take breaks. I really don't believe in trading 8 hours per day, sitting on the chair, or I don't care how comfortable your chair is. I don't think there's an edge in doing that. There are days where you could participate and trade more because, the market conditions are favoring that, but I still think it could lead to over trading. So I've looked at most of my days, and I tend to have an average of 10 to 20 trades per day. Some days, which for instance, maybe family stuff or whatever, I'll only have 3, 5, maximum 8 trades per day that day. But in a good typical day, I'll have 10 to 20 trades, and that's pretty much the average. And I think that's not totally over trading. I think there is a good ratio there. So when it comes to psychology, I tend to meditate. I kind of try to relax, take deep breaths and breaks, and I think that helps. And mostly for trade management, for me, the most important thing really is taking losses. When I take a loss and I've got three in a row, I don't care how small or how big they are, I will generally take a break. I'll go heat some coffee, I'll prepare some tea or whatever. I just have to get off the screen and get off the chair because I tend to notice that when I have two or three losses in a row, it's because one, coming back to my main screen there, my execution is wrong. I'm not reading the market pretty well, or maybe the pace of the market is not good enough to really trade at that time. Okay, so kind of to resume and you know give you guys a quick review of all this. I'm basically going into the new year with a resolution to not be over biased when I'm trading, to really maintain a structured way to validate what setups I'm looking for and just trade those setups and really, you know, believe in them and not over trade when I don't have any real reason to be trading. Okay, so this here is a NASDAQ 6 point uh, tick chart, right? Well, sorry, it's not a tick chart. It's I can't find the word now. It is a range chart. Here we are, 24 ticks, so that's 6 points. It's just to give me a quick validation of where market's been absorbing. When it moves down like this and we've got a good little congestion, what occurred here, right? So I've got the footprint to give me that, and then on the bottom, I'm just going to keep the deltas to give me a quick trigger. So I'm looking for triggers. I'm looking for which market is moving, what's the current tape looking like, where do we have value, and since the market's closed now, I can't show you the domes, but I normally have my domes on the side, and I will kind of maintain a visual on my domes because I really started putting the footprint into my domes here. So if I show you guys quickly the post that I had done here, I have the current trades and then the full volume session of the volume profile on my domes now. I started putting that on Jigsaw so that I quickly see it, but I also have it on Sierra charts. It's just that sometimes when Jigsaw some kind of a disconnection occurs, the volume here does not it doesn't add up. I would have to restart the whole thing, and it's a bit annoying. So having that on Sierra, that's one advantage of having a second platform just for the footprint is there. So I kind of keep the I just did this recently where I put the sell orders and the buy orders on ES on two separate tapes, especially for the blocks, and then I have the regular ones, and then the dome, which has just this additional layering with the volume separate like this. Okay, so I just wanted to kind of go over that, and I think for the new year, 2022 will most likely be a very volatile year. Um, there's, a lot of headlines, Omicron, economy, interest rates. Again, I think we're going to have a very good um, volatile year. I'm not expecting anything like, the pandemic period, or, but I think we could definitely have, a good period where the volatility could pick up, and as traders, we just have to adapt to all of that. And, again, I don't know if it was pretty clear, but I kind of wanted to show this here today where, I go back to my ratio charts and I explain to you guys where, I want to trade the market that's got more volatility. I know it you could most likely see this on a dome, but sometimes when you have a separate chart that just gives you the ratio where 1 NQ to 3 ES or 1 NQ to 1 ES, you could do that on TradingView, and quickly again that's how you put it in. I could maybe go into some other video where I'll explain a bit more in detail how I use this. So I think this could definitely be a way to start the new year fresh and, you know, trade the current market, trade what you see, and perhaps take less trades when basically there's no trigger or no market movements. And once again, I think I rarely trade the last 30 minutes. So that's one thing a lot of traders were asking me, do you trade the last 30 minutes? I don't. So that's something I just wanted to clarify. Hope this helps. Happy New Year, everyone, and wishing you all the best for 2022. And if there's anything you want to comment around what I just explained here today when it comes to trade management, what do you guys do? What kind of things do you do for, to kind of refresh and keep the psychological part of the game easier? Anything around volatility, velocity, pace of market, any questions, don't hesitate to contact me, and wish you all the best for 2022. Thanks.